ICICI Prudential Asset Management Company is making its IPO debut on 19 December 2025. Subscription for this IPO opens on December 12, 2025, just 2-3 days away from today. You should know that this is the largest asset manager in India by active mutual fund assets under management, commanding a market share of 13.3% as of March 2025. In addition, as of now, the company's mutual fund arm has crossed 10 lakh crore rupees, reflecting a strong growth, widespread investor trust, and the robust scale actually. Its product offerings are broad and diversified, like equity, debt funds, hybrid funds, ETFs, PMFs, and many more, serving a wide range of investor needs. Its upcoming IPO is targeting a $12 billion market valuation, with grey market premiums already signaling a 13% listing gains. The IPO price band for this company has been set between 2061 rupees to 2165 rupees per share. Friends, is it a good idea to look at this IPO? We'll study this IPO in detail using DCF method. So without wasting much time, let's start the main topic. Before starting the analysis, I want to give one big disclaimer. This is not a investment suggestion, a buy or sell. It's not a buying or selling suggestion, okay? So this is just an analysis using DCF method to calculate the intrinsic value of a company. So right now, I don't know whether that particular price range is justifiable or not, but I get the details from the whatever the data is available, and based on that I will calculate the intrinsic value. That's all. So from there, any buying decision or selling decision, it's your responsibility. If you make profit, don't share with me, but if you don't make loss also, don't blame me, okay? So basically we need these details to calculate the intrinsic value, like owner earnings, growth rate, discount rate, terminal growth, number of outstanding shares, cash, and debt. Okay, so there are three variables we need instead of owner earnings. Basically, in this case, people will take net profit or free cash flow or owner earnings. So net profit is the basic data available across the websites usually. So FCF, it's available for most of the listed companies as well, but owner earnings is not available. But owner earnings is the most accurate method to calculate the intrinsic value. So right now we don't have the complete details of owner earnings, so I want to get the accurate data as much as possible. That's why I'm not using net profit. So if you see here, the net profit data is available here. For example, I can use the net profit data straight away for the previous year, 2025 year, the current year, but instead of using the net profit directly, because I want to get accurate as much as possible, that's why I will not get into FCF. I will try to calculate the owner earnings. Okay, so for most of the companies this FCF data will be available, but right now this is not at a listed company, right? That's why this free cash flow data is not available. So I will try to get the owner earnings as much as possible. Okay, so this is the equation: owner earnings is equal to net profit, add any depreciation and amortization value, maintenance capex, subtract the maintenance capex of the company, so plus or minus changes in the working capital. So whether the company is reinvesting back the profit or not, now that percentage we need to add. So right now the net profit, I can get it. Okay, for example, net profit is, if you check here, the net profit for the last the current year, okay, 2025 year, is 2651. Usually Warren Buffett and Charlie Munger suggest to take the average of the last 3 years or 5 years as the net profit. So this is just a it's listing as of now, and also I'm assuming, or the future for India is bright, right? So there are many youngsters who falls in the 30 to 60 working range, and I'm assuming this demography will improve. So I'm assuming many people will open the demat accounts, many people will invest their money in this. So I'm assuming, or I'm taking this much as it is. Okay, I'm not taking the average of this. If I take the average, I should take around 2000 crore rupees, but I'm taking this as it is on a little liberal side. Okay, assuming India growth is future in the next few decade. Okay, so net profit is 2651 crore, right? 2651 crore. So plus we need to add the depreciation and amortization. So if I come here, the depreciation for this year is 85 crore rupees. So depreciation is 85 crore rupees. There is no amortization because this is a still a brand new company. So amortization is not there. So maintenance capex is not available as of now for this company. But I would say maintenance capex will be very very less because this is not a like a production company, right? Like a metal production company or steel production company, because for those kind of production companies maintenance capex will be huge. But this is just an asset management company. Like it might invest in few server, it might invest in few laptops, computer, few offices. So I'm assuming the maintenance capex is very very less or negligible. Even if you search in ChatGPT or Google, that's what it says. So you know probably you might take 5 CR 10 CR as a maintenance capex. Probably I will take 5 CR as a maintenance capex. So changes in working capital is not yet available. So usually they reinvest a little bit of their profit in the business. So as of now this data is not available. So I'm already liberal taking this, and taking this 5 CR. So I don't take anything this because the data is also not available. So owner earnings, if I, for example, if I add this 2651 plus 85 minus 5, so this is equal to 2731. So owner earnings is 2731 crores. Friends, please note I'm taking this value on a liberal side. Okay, so now the growth rate, how much growth we need to take. Okay, so if you go to screener here, if you check the growth rate of the company itself, okay, this ICICI Prudential, we need to look at both the sales and profit growth. Okay, so the profit growth is approximately 22% in last 3 years. The previous year is 29%. So the sales growth is last 3 years is 24%, previous year is 32%. So which is making a good sales growth, good profit growth, right? So we can take approximately 20%. Liberal side, safer side, 20% is good. But at the same time, we need to check the other companies in the same segment actually. So these are all the peer comparison, right? If you see here, for example, sales growth approximately 20-25% for most of the companies. Profit growth is also, these are all negative. We can exclude this. So remaining 29, 57, 64. So 20 to 25% growth we can take, but 20% we can take on the safer side because India's growth is also good. So 20% decently we can take. Next is discount rate. So what discount rate means is, for example, let's say I will get 1 crore rupees after 1 year. So for that opportunity, I should not pay 1 crore rupees, right? Because if I pay 1 crore rupees now, if I get the same 1 crore rupees after 1 year, it doesn't make any sense, right? Because the buying power of 1 crore rupees now, the buying power of 1 crore rupees after 1 year is different. Suppose let's say you give me a deal like, if you give me 80 lakh rupees now, I will give you 1 crore rupees after 1 year, means that it makes sense because I'll be getting additional that 20% thing, right? 20 lakh rupees actually. So that is why we should take this discount rate. So for most of the stable companies, people or analysts take 10 to 12%, and for new companies or little risky companies, they take 18%, 15%, 18%, 20%. So right now I'm taking only 10%. We should know 6-7% is the FD rate, but still I'm discount rate, I'm taking 10% only. You can take 12% also, but as of now I'm taking 10%. This is on the liberal side. Okay, so I'm giving more margin towards the company actually. Okay, so 10%, that's fine. Next is terminal growth. So what is the terminal growth means? What will be the growth rate of this company after 5 years? So for the first 5 years, we are assuming 20%. don't think every company will show the same growth rate forever, right? It will go like this, then stabilizes, then it will go, or it might go down, right? So for this, I'm assuming 20% growth rate for the next 5 years, and after 5 years, I'm assuming 5% growth rate forever. Okay, so this is decent. Okay, 5%. I'm quite decent because most of the stable companies, once they become big stable, they keep on displaying 5 to 6% growth. So I'm taking 5%. This is decent. And number of outstanding shares. So usually we get number of outstanding shares here, okay, here. But as of now, it is not displaying. So what we can do is we can ask ChatGPT itself what is the number of equity shares in ICICI Prudential Asset Management Company. Okay, so we can ask that itself. So it will give you the data. So what I do is, to be safer side, I will also go to Perplexity. I will take the data from two sources, because sometimes one AI can give a wrong information. I want it to be safer side. Okay, so it says 49.42, right? 49.42 crores actually. Okay, let's check here. Yeah, it is 49.42 crore, right? So I will take this data as it is. Okay, so number of outstanding shares is, I will take this data as it is. Okay, 494, 49 crore, 42 lakh 58,520. Okay, so now the cash part. So if you come to here, cash equivalents, it is showing the data. It has 20.3 crore as a cash. So I will take 20.3 crore as the cash. Debt, it don't have the debt, so I take the debt as 0. So if you give this information for the ChatGPT or Perplexity, and if you ask ChatGPT to calculate the intrinsic value of the company, it will give you the data. So what we need to do is calculate. Please ignore the spelling, friends. Calculate the intrinsic value of this company using the below details. Okay, so if you give this, it will give the intrinsic value. So right now they are quoting around 2000 rupees, right? 2065 to 2165. That's what the listing price it is saying, right? So if you check the intrinsic value, I will also check the intrinsic value in Perplexity. Okay, from two sources. Calculate the intrinsic value of this company using the below details. Okay, so I will check here. Okay, it takes all the input data, then it will apply 20% growth for the first 5 years. This is the future cash flow, and discounting that cash flow back to today with 10% discounted. That's what I'm given. So then total equity value is this much, 1 lakh something, 1 lakh crore rupees is the total equity value, divided by the total number of shares. Okay, this is the total number of shares. uh, so I mean, it is converting crore to normal and then dividing it back. So per share is 2154 rupees is the intrinsic value. 2155, approximately 2155 the intrinsic value. If I check here in Perplexity, per share is 2154.6. It is almost same. So 2155 is the intrinsic value. Okay, so the intrinsic value is value is 2155. So their listing price is, if I remember correct, 2065 to 2161 or 65, I guess. Okay, let's say 65. So if you look at this, they have not done overestimation according to me, because in India it is quite common that most of the companies, they overestimate and shoot up their price, and they list in terms of 100 PE, 150 PE, sometimes 500 PE, 1000 PE as well. It doesn't make any sense to me. But this listing price of this company seems to be decent and not overestimated. Okay, so that doesn't mean, friends, you should invest in this IPO. It's up to you. I'm not suggesting you to buy or sell this company. I'm just calculating the intrinsic value of this company, and I'm saying this intrinsic value is very accurate compared to their listing price. So any decision you make from this data, you are 100% responsible. I don't want any responsibility. I hope this video added value to your time, friends. Do you want to know more analysis like this for the upcoming IPOs? If yes, please comment on the YouTube. I mean, in the below. I will try to make as much as videos as possible. Also, do you want to learn this intrinsic value calculation in detail and in depth to calculate your own analysis for all the IPO companies? If yes, there is a link. You can click on the link, and you can book a personal session with me. I will explain how to calculate this intrinsic value in depth, in detail, with many more parameters. Okay, so we will see you with another video. Until then, thank you. See you. Bye bye. Namaste.